Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Bryce Duskett, and thanks for joining us today on Market Journal. As we wrap up the month of January, certainly a lot of things happening in the agricultural industry. So let's get into this week's program and see what our teams put together. As we start things off, earlier this month, Nebraska Governor Pete Ricketts unveiled a $500 million plan to divert water from Colorado by invoking a 99-year-old compact between the two states. This compact would allow Nebraska to be able to seize access to Colorado land along the South Platte River for the purpose of building canals. The compact, which was approved in 1923, would grant Nebraska access to 120 cubic feet per second, or nearly 900 gallons, from the South Platte River during the irrigation season, which is from April 1st to October 15th, and then 500 cubic feet per second during the irrigation off-season. This would be a welcome infrastructure boost for many producers in central and western Nebraska. However, this proposal could face a Rocky Mountain-sized uphill battle from the state of Colorado.
I think Colorado would have some real concerns about this project. It's been probably close to 100 years since Nebraska did any work on that, and they would make the argument that Nebraska's waited too long. Even though it's recognized under the compact, Nebraska is simply taking too long to develop the project, and they shouldn't be entitled to the water, especially if it would displace Colorado water users who went ahead and developed off-season storage and stuff like that. And what it would mean to Nebraska agriculture kind of depends on how much water we're talking about. I mean, Southwest Nebraska is, they've got some groundwater depletion issues there, and so more water would certainly be welcome, whether it's for groundwater recharge or surface water irrigation or whatever. But we don't know how much water is involved. We don't know how it would be used once it got to Nebraska. And so there's just an awful lot of questions that we have. But my guess is that if we pushed on it very hard, that Colorado would probably take us to court.
While little is known about the project, aside from the proposed $500 million expense, Dave tells us he does expect to learn more about this finer details of the project as the 2022 legislative session continues to play out. Beyond the possible legal challenges faced from the state of Colorado, Dave is waiting to see how the Nebraska political dominoes will fall.
First, is there more detail about what this project would be? How much it would cost, how much water would we get, and then, how the water would be used. That would be nice to have better information about. But then the second thing is, that's an awful big chunk of the governor's budget for 2022. And I imagine that there are plenty of senators in the unicameral who would have their own projects that they'd rather see funded rather than this irrigation project in Southwest Nebraska. So there's that whole political dimension that we'll just kind of have to watch and see play out as the budget moves through the legislative process.
Nebraska's Attorney General Doug Peterson said of this project that, quote, Colorado has been issuing water usage permits that would cut into Nebraska's rightful share. He went on saying, in part, it's crucial that we be able to maintain these flows. This is certainly a story our team will continue to follow as that legislative session continues. As we turn our attention now to the grain markets, the soaring tensions in Ukraine is capturing many of the headlines. With some of the most fertile land on earth, Ukraine is a large exporter of corn, but it's the country's wheat that has the biggest impact on food security across the world. In 2020, Ukraine exported roughly 18 million metric tons of it, making it the world's fifth largest exporter. To discuss this topic and more in the grain complex, we were joined on Wednesday by Darin Newsom of Darin Newsom Analysis. Let's start off today's conversation discussing the situation with Ukraine. Ukraine is known as the breadbasket for Europe, one of the names they have there. Let's talk about how this could all play into the commodity situation. I mean, big picture, what's worst case scenario with those tensions, and how would that affect the commodities here in the U.S.?
Worst case scenario, obviously, from a global point of view, is Russia actually invading Ukraine again, similar to what it did this time of year in 2014. What it does then is it puts it puts the spotlight on crude oil, natural gas, wheat, and corn, and in the grains. Obviously, it's the wheat market and Chicago market in particular. So, I mean, again, we don't want to see, I think the rest of the world doesn't want to see Russia invading Ukraine again. And then the after effects of the threatened sanctions, are they followed through on? What are the effects of the market? It's going to add volatility to already incredibly volatile markets that, some of this due to the meltdown in global stock markets here in January. And it just makes a volatile situation that much worse.
You mentioned the word volatile, Darin. I think of the wheat complex we've seen as of late here. Want to mention, though, here this week we've seen Kansas get quite a bit of snow, at least in places. I'm thinking 20-plus inches it looked like on the map there. What's your take of how this affects that winter wheat crop? I've heard you talk about before, we hear a lot of things in the wintertime, but wait till the spring to see what that crop is. Is that still your assessment at this time of year?
The winter wheat crop is not made or lost in the winter months. And, it can be hurt or it can be helped, but it's not made or lost here. And so we have to kind of take a step back. Now, this winter storm that moved through this week brought some incredible snows. As you said, we're hearing 2 feet plus in some parts of far western Kansas. And then, maybe a couple hundred miles away, it was 2 inches. So, I mean, it was low, it was centralized. It was very regionalized. And it certainly could help the area. But the big picture is much of the southern plains in the western part remain in a drought situation. They continue to show soil moisture deficits. This could help a little, but it doesn't improve the big picture all that much as we work our way into the last half of winter and start to set our sights on spring.
Well, Darin, right, wrong, or otherwise, this time of year we start to see analysts come out with their expectations, what we'll see when it comes to the corn versus soybean acreage debate as we approach the spring planting season. What's your thoughts on that conversation? I mean, we're just nearing the end of January here.
In all seriousness, if we take it into account, fertilizer prices and the possibility of the nitrogen fertilizer just isn't going to be available this spring. The general consensus seems to be that we're going to see an increase in soybean acres in 2022. It makes sense. So this would also tell us that Punxsutawney Phil does not see his shadow. It sees his shadow. We're going to have a later spring. So I do think there's a good chance that we're going to see increased soybean acres. I know there's a lot of chatter out there that soybean acres is going to outpace corn this year. It's always possible, but the U.S. likes to plant corn, likes to find a reason to plant corn. So it'll be very interesting to watch play out here in 22.
Darin, something else I wanted to ask you about, I think you mentioned this here earlier. We see a bit of a sell-off when it comes to some of those stock markets. What could that mean for commodities?
Yeah, the interesting thing is we've got a lot of selling going on in the stock markets right now. I know toward middle part of the week, towards the latter end, we did see some buying, but overall there's this bearish sense to the stock markets here in throughout January. And what this could do is that money's going to look for somewhere to go. It's not just going to sit on the sidelines. It doesn't all just get converted to cash and they sit on it. And so when they start thinking about commodities, and given the talk that inflation is still here, inflation's still a hot button issue, what they're going to do is going to look over in the commodity complex, and they're going to look for markets that have bullish fundamentals. And there's a long list of those. And when I talk about bullish fundamentals, I'm talking about future spreads. I'm talking about inverted forward curves. They've got their pick of in almost anything from crude oil and heating oil to corn, soybeans, wheat. They can choose which markets they like the best. So I think it is going to bring some money into the commodity sector, and it's going to particularly bring money into those markets again that have long-term bullish supply and demand. Certainly, we can see that playing out with the types of rallies that we're seeing in these commodities. We can see what soybeans have done, certainly what wheat has done of late. And so, yeah, I think it's going to make for bring up the word again, a very volatile spring with all of the other factors, all of the other issues that are still at play.
Darin, final word is yours this week. What final thoughts would you like to share with our viewers, or what piece of marketing advice would you like to leave us with?
The one piece of marketing advice is the one I've been asked a great deal, and that is if my dad was sitting across the desk from me and asking if it was time to lock in some of these new crop prices, I would not tell him no. I don't know how many negatives are in that sentence, but I would not tell him no. These are good prices, but I'd like to keep some powder dry. Given the long-term fundamental situation, corn, soybeans, wheat, I don't want to get everything sold. I want to sit back, let these markets run for a little while, give them some room, see if some of that investment money comes in, and then kind of bet on the idea that we're going to have better selling opportunities down the road.
Our thanks to Darin for joining us this week for that discussion. On to the livestock markets now. Earlier this week, we caught up with UNL Livestock Market analyst Elliott Dennis to get his take on the latest news that's impacting the livestock complex. We began that conversation, though, getting his thoughts on the latest cattle on feed report.
Yeah, so there's really two things. First, we're talking about heifer on heifer that were slaughtered, and also cows were the two things that really kind of caught my eye. First, about 20% of all the cattle were cows, and that was about the highest since 2011. And also the heifers that were slaughtered were about 37% of all of the cattle that were harvested, and that was the highest since about 2004. Both of those are signaling that we're still having pretty heavy herd contraction, which leads us into next week's report of the cattle inventory report. We should see that come down quite a bit as far as total herd that we're going to see, both retained heifers and also cows for breeding.
What is it telling us about the current herd size in the U.S. and the drought situation, but also feed that some folks are being challenged with right now?
Yeah, I think the weights within the cattle on feed report is probably the most useful, because it really shows the dynamics of like you're saying, the herd and also the drought conditions. In Texas, we saw about 120% increase from the previous year. That's where most of that larger cattle on feed came from. But about 45 to 47% of that was cattle weighing less than 600 pounds. That's very, very light cattle coming into the feed yards. In Nebraska, where we tend to place heavier cattle, we're generally in the 40 to 45% range. We were only in the 30% range this past report, and we really beefed up more in the middle markets, or the middle weights. And so what that really was kind of showing me, and where some of that expectation was, is we have the stocker industry really acts as that buffer, and with the accelerated drought, the feed prices, it's really pushing cattle into the market earlier than we would have expected. And there's probably some pricing incentives because prices were much higher than we expected.
You mentioned there's a report coming out next week. Again, high level, what are you looking for in that report? So what are the numbers we need to follow from that?
Yeah, so that report, we can really calculate a couple things. We can calculate the stocker index. That gives us an idea of what is going to be coming through the market as far as stocker cattle. And I'm also looking at heifers that are held back for retention. We have a pretty good idea of what cow slaughter has been, and that gives us the total number of animals that are going to be reduced this year and in the next 12 months. Heifers held back for replacement gives us the idea really of what that beef cow herd and potentially feeder cattle are going to be really in 2023. And so that's the big number I'm looking for, and I think has the biggest opportunity to change.
One of the last times you were on Market Journal, Elliott, we talked about this Prop 12 in California. A judge has come out and halted that. What can you share with our viewers? What's the latest going on there?
Yeah, it really had to do with the federal or the policy not being fully developed as far as the Department of Agriculture. The judge put that on hold and really gives, after that complete ruling comes out, it's about 180 days for the industry to become compliant. And so it just provides, if we're going to enforce this policy, we have to know actually what the policy is going to be doing.
So the news right there is stay tuned. We've got more to come, obviously.
Yeah, absolutely.
Well, let's kind of shift up the conversation here. Broadly speaking, what in the livestock complex has caught your eye recently? Yeah,
so the hay stocks came out, and that was the change year over year between the December 2020 hay crop and the December 2021 hay crop. And really, we saw the effects of drought there, right? Not only are we seeing the effects in total hay inventory, but we're seeing it in the quality of the hay, which is also important. And so really see that northwestern region pretty decimated as far as hay stocks. And what that indicates to the market is that there are incentives to continue to push cattle forward because, as hay stocks go down, prices come up and it just is more expensive.
Well, Elliott, let's round out today's conversation, giving the last word. Final thoughts from you, any risk management advice you'd like to leave us with?
Yeah, so I went recently and calculated the value of gain for if we were going to sell an 850 pound steer out of Lexington. That value of gain is about 117. To give you an idea, it's pretty flat between really the end of March to the beginning of May, which means there's no real incentive to carry them longer to try to increase the value you're going to be receiving. So really there's kind of that if you can push them a little more aggressively, sell them in beginning of March, that's going to be pretty much the same price until beginning of May. That value of gain changes given market conditions, and when I calculated that back in October and November, that value of gain to sell that same animal at that same time frame was about 130, 135. So markets do change, and just because that opportunity is there previously doesn't mean that the market will pay you that when you actually deliver the animal, which is why we always emphasize price risk management. When we see those opportunities, we can lock in the price, futures options, livestock risk protection through USDA RMA, and that at least provides some a greater guarantee that we're going to receive that the price that we want at harvest.
Thanks again to both Darin and Elliott for their time this week. Coming up next week, we'll be joined by Darin Fessler of Lakefront Futures and Options. If you have a question you'd like for me to ask Darin, get in touch with us on social media, and I'll be sure to pass that question along. Up next, how can you future-proof your operation, insulating your farm or ranch for the most adverse scenarios that might be on the horizon? Certainly a complex question, but it's one that Haley Miles, Lance Atwater, and Joe Kenobi talked about at length during a panel discussion at the recent Nebraska Young, Beginning, and Small Farmer Symposium. You can read how these young producers are working to make their operations successful in the January issue of the Nebraska Farmer. It is now time for our weekly weather forecast with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Well, Al, what do you have in store for us as we look toward the new week?
Well, Bryce, kind of a repeat of what we've seen the last few weeks. We get a little bit of warming going into the weekend, and then we get a frontal boundary passage and bring some colder air in. That's exactly what we had this last week. We've seen that cold air move in during the early part of the week, and finally started to see some warming as we got to the end of the week. Did get some accumulating snowfall in parts of Southwest, West Central, and the southern panhandle of Nebraska, but the real significant snowfall fell in a narrow corridor from northeast Colorado through west central portions of Kansas, where up to 2 foot of snowfall is reported. So although conditions weren't that bad, as we go into next week, we may be dealing with some accumulating snowfall. And we talked about a pattern change last week, and it looks like that's ongoing, and we may actually start to see a much more active pattern as we move through this month. So let's take a look at the upper air models and see what we have in store. First thing I'll draw your attention to is the large trough of the eastern United States has been pretty much persistent this entire month, remains there. On the backside, we get a little bit of energy coming through eastern Nebraska that will keep our temperatures just a little bit cooler than western Nebraska. We'll remain in the 40s today, more into the upper 40s to low 50s across the west. But you can see there's an absence of any significant weather here in the central part of the country, as most of it is off the eastern United States. By the time we get to tomorrow, we'll see that trough lifting a little bit, so the cold air will start shunning a little bit more toward the northeast, and we'll get some of that warmer conditions from western Nebraska moving in. Should see 40s well widespread across the east and 50s across much of the western part of the state. Now on Monday, we start to see troughing action developing in the western United States and some energy shooting across the central Rockies. But in advance of that, we're going to have a good southerly flow at the surface. So pretty much everybody should be into the upper 40s northeast to the mid to upper 50s across the southwest. Now, by the time we get to Tuesday, this trough starts to really dig. Some cooler air will start to move into northern Nebraska as this high pressure at the surface starts to build southward. Low pressure forms over eastern portions of New Mexico. That's going to start to spin some moisture up, and we should see some accumulating snowfall in the Black Hills, spreading some lighter snowfall across the northwestern half of the state. And as we get into Wednesday, that trough digs very far south into Texas, allows that cold air in at the surface, and over top of it we have the moisture streaming toward the northeast, so it does look like there will be a band of accumulating snowfall. Right now it's targeting the southeastern half of the state. That may change. Pay attention to the weather updates. And by Thursday we start to see that cold air settle in, and after the frontal boundary passage, bringing very cold below normal conditions into our region as the accumulating snowfall makes its way toward the eastern United States, lighter snowfall over the northern Rockies, and then we have another piece of energy that is going to drive down some colder air over the Rockies and some snowfall, but at this time it looks like this system will stay to the south of us and not impact us in terms of accumulating snowfall. Therefore, as we go into the 8 to 14 day forecast, the cold air looks like it might start to ease up slightly toward the Great Lakes, although there's another pulse coming in later next weekend that may reinforce this cold air. And in terms of precipitation, slight chance for below normal precipitation, but more importantly, another significant weather event may be starting to materialize as we get around the 10th.
Thank you, Al. Finally, today we're bringing you part 2 of our carbon credit report from the 2021 Nebraska Ag Expo, which took place at the Lancaster Event Center. Last week, we examined just how these carbon credits can potentially benefit ag producers financially, while simultaneously potentially improving that land that they steward. This week, we'll dive a bit deeper into some of those finer details of carbon credit markets, and Market Journal's Mike Straub has this story.
And healthy soils.
A 10-year contract might feel like a long time. However, in the carbon credit industry, that kind of contract is considered a compromise and does have some perks.
There are agreements that go longer than 10 years, but 10 years is kind of what probably feels most realistic to growers. And 10 years seems like a long time. If I asked a grower to sell their grain or their livestock out for 10 years today, that would be a really uncomfortable conversation because nobody knows what the markets are going to do over that course of time. So we need to have longer term agreements in place with this because the people that buy these carbon credits to use in their industries and their companies, the value to them comes in storing that carbon over a long term. So a lot of times they want to see carbon stored 30, 50 years and longer. Well, we know that generationally land changes hands and all of this thing. So in agriculture, we're trying to start off with a compromise, and that's at 10 years. What we do in our program is make sure that the contract's written as such so that if prices appreciate over time, the grower has the opportunity to sell their tons at a higher price when those sell points come to them throughout the course of the contract. And we also set that floor so that if the market does have down years, they've got a floor underneath it. So trying to provide some stability and some reassurance to go along with longer term contracts.
That's what we got to pay attention to is, who are we serving where?
After the 10-year contract ends, carbon sequestration is measured in spot check form, and the grower does not have any financial responsibility in longer-term scenarios.
Carbon sequestration after that 10-year contract is really only measured in somewhat of a spot check form. The verifying body that issues these credits will occasionally come back in and want to spot check a place here or there to verify that what they stored over the course of this contract hasn't gone backwards and things like that. But the grower doesn't have a responsibility for that, any financial or incentive responsibility for that in a longer term scenario as well. So the idea, though, of course, is going to be that when we adopt these practices and you're tying them into your operation for 10 years, you're not going to want to go back and start tilling again. You're not going to want to go back and rip out a pasture and turn it into crop ground, those sorts of things in the long term. You've seen the benefits, not just financially, but soil health-wise and things like that to provide that. From the environmental standpoint of things, there's a tremendous potential in all of this to not just be carbon, right? Carbon we call this marketplace in its entirety an ecosystem services marketplace, and we will continue to see more pieces evolve in this, whether that's nitrous oxide or methane. We may have spot water markets that incentivize water utilization out of aquifers, out of surface water and things like that. This marketplace is going to continue to grow and have opportunities for growers.
It should be mentioned that the carbon component does not provide enough money alone to pay for the practices. The long-term benefit for your future is the soil health these practices generate.
I think one of the biggest misconceptions or one of the biggest expectations that growers have when they begin to engage in this conversation process is there's enough money in the carbon component of it to pay for the practice change. And today that's just not the case usually for many of these pieces. Cover crops, whether it's the seeding aspect or the actual cost of seed, tend to cost more than the carbon that they're going to generate. It's back to that long-term 10-year, a decade look at what you can do for soil health, water storage, nitrogen production, as well as a generational piece that goes along with this. It's a fairly small investment back in your land on an annual basis to continue to grow that asset for your legacy and for your family.
Agronomy tool, the HANA instruments.
The main piece of advice when starting a contract like this is ask individuals what they are doing in this marketplace and understand what it is you're getting into.
Ask the questions. Ask people what they're doing in this marketplace, and don't jump right into the first person that comes to your door on this. Understand what the ask is. There are contracts today that reward greenhouse gas reduction, which is a yearly thing, all the way up to contracts that look at a long-term, 10-year, maybe even more aspect of carbon sequestration. Understand what you're signing up for, understand the terms of that agreement, and what they're asking of you. What happens if you exceed projections, and what happens if you're lower than projections? Know all those ins and outs that you are so familiar with asking in grain contracts, fertilizer contracts, livestock contracts. Learn what those questions are and what's valuable to your operation, and make sure that you're comfortable with those questions and those answers when you engage in this marketplace.
Same thing under this sedan or whatever this is. Some type
If carbon sequestration is a practice you've been thinking about utilizing on your land, making sure you understand the contract, knowing that the soil benefits is the main goal of the operation, and asking questions to experienced individuals should get you started. Reporting for Market Journal, I'm Mike Straub.
Thanks, Mike. With the ever-changing nature of these contracts, it might be difficult to keep up. You can find the latest information online at the website cropwatch.unl.edu. Another helpful website is cap.unl.edu. That is going to do it for this week's show. If you'd like more from our team, be sure you've subscribed to Market Journal on YouTube. You can also follow us on social media to join in on that conversation. Now, coming up next week, we'll have special reports from the 2022 Cattle Industry Convention and NCBA Trade Show. We hope to see you back here next time. Until then, I'm Bryce Duskett. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.